Good morning and welcome to Market Cafe, a show where we'll get you all the updates that matter to you with me, Ankur Mishra and Kanishka Sarkar. Kanishka, good morning. Yesterday, quite an address by Prime Minister Narendra Modi on Operation Sindoor.
Absolutely, Ankur. A very good morning to you, first of all. Let's first get tracking the most important development. Now, in his first address to the nation since the launch of Operation Sindoor, Prime Minister Modi said the time for talks while terror thrives is over. This is with deterrence with teeth and resolve with range. A new red line has been drawn with Operation Sindoor. He also lauded the valor of the armed forces and dominance in a new age war. He wants the neighbor that it needs to dismantle all forms of terror on its soil or risk being wiped out by the same terrorists it harbors. The conversation with Pakistan will only be around Pakistan-occupied Kashmir and dismantling of terror networks. He spoke about innocent lives being lost in Pahalgam to brutal terror, an attack on India's communal integrity. He said that the Operation Sindoor has served justice by targeting terror camps driven by a nation-first approach. He also ridiculed Pakistan for not helping India fight terror but launching an attack on India instead. But he said that India thwarted all Pakistani attacks and pummeled terror centers based in Pakistani territory. The PM said that the Pakistani army contacted India's DGMO when all its attempts to escalate tensions failed. Going ahead, he said Indian forces are watchful for any further misadventures. Let's listen in.
न्यू नॉर्मल तय कर दिया है। पहला, भारत पर आतंकी हमला हुआ तो मुंह तोड़ जवाब दिया जाएगा। हम अपने तरीके से, अपनी शर्तों पर जवाब देकर रहेंगे। हर उस जगह जाकर कठोर कार्रवाई करेंगे जहां से आतंकी जड़ें निकलती हैं। दूसरा, कोई भी न्यूक्लियर ब्लैकमेल भारत नहीं सहेगा। न्यूक्लियर ब्लैकमेल की आड़ में पनप रहे आतंकी ठिकानों पर भारत सटीक और निर्णायक प्रहार करेगा। तीसरा, हम आतंक की सरपरस्त सरकार और आतंक के आकाओं को अलग अलग नहीं देखेंगे। न्यू एज वॉरफेयर में भी अपनी श्रेष्ठता सिद्ध की। इस ऑपरेशन के दौरान हमारे मेड इन इंडिया हथियारों की प्रामाणिकता सिद्ध हुई। आज दुनिया देख रही है 21वीं सदी के वॉरफेयर में मेड इन इंडिया डिफेंस इक्विपमेंट्स, इसका समय आ चुका है। साथियों, हर प्रकार के आतंकवाद के खिलाफ हम सभी का एकजुट रहना, हमारी एकता, हमारी सबसे बड़ी शक्ति है। कोई भी न्यूक्लियर ब्लैकमेल भारत नहीं सहेगा। न्यूक्लियर ब्लैकमेल की आड़ में पनप रहे आतंकी ठिकानों पर भारत सटीक और निर्णायक प्रहार करेगा।
US President Donald Trump has once again lauded India and Pakistan's leadership on the back of the ceasefire agreement, reiterating that US has helped a lot, adding that they look forward to doing a lot more trade with both the nations. Let's listen in.
On Saturday, my administration helped broker a full and immediate ceasefire, I think a permanent one, between India and Pakistan, ending a dangerous conflict of two nations with lots of nuclear weapons. And they were going at it hot and heavy, and it was seemingly not going to stop. And I'm very proud to let you know that the leadership of India and Pakistan was unwavering, powerful, but unwavering in both cases, and having these, they really were, from the standpoint of having the strength and the wisdom and fortitude to fully know and to understand the gravity of the situation. And we helped a lot. And we helped also with trade. I said, come on, we're going to do a lot of trade with you guys. Let's stop it. Let's stop it. If you stop it, we're doing trade. If you don't stop it, we're not going to do any trade. People have never really used trade the way I used it. That I can tell you. And all of a sudden they said, I think we're going to stop. And they have. And they did it for a lot of reasons, but trade is a big one. We're going to do a lot of trade with Pakistan. We're going to do a lot of trade with India. We're negotiating with India right now. We're going to be soon negotiating with Pakistan. And we stopped the nuclear conflict. I think it could have been a bad nuclear war. Millions of people could have been killed, so I'm very proud of that.
All right, then that's the latest word coming in from the US president on India-Pakistan ceasefire. But let's move on. Now, India and Pakistan's DGMOs also spoke in the first formal military-to-military conversations since both sides agreed to halt cross-border strikes. Now, the two sides deliberated on ways to avoid any military escalation. Both sides focused on continuing the commitment that no shots will be fired from either side. They agreed on considering immediate steps to reduce troops of the two militaries from the borders and forward areas. Now, this round of talks comes on the heels of Operation Sindoor and the political messaging that followed. So was this just a procedural follow-up, or is there more happening behind the scenes? Sumit Chaturvedi is joining in with all the details.
Well, yes, after much deliberations, the DGMO level talks were supposed to happen in the afternoon, but they happened in the evening. And it looks like moving towards normalcy now. Both sides agreed to that not a shot will be fired, and a status quo they will try to bring it back as soon as possible. So yes, in letter and spirits, they are trying to stick to the ceasefire spirit. There were small incidents of 1-2 drone sightings and all that during last night at border, but overall situation was calm, as can be said. DGMOs, well, as we expect them to continue talking for the next few days as well. And it's a procedure. It used to happen earlier also. It was a procedure set in to maintain calm at border, and after the flare-up at the border and conflict, now this process has been set in so that a permanent peace can be built in at the border. But it's again a matter of fact how Pakistan decides to completely adhere to this kind of behavior, which it is doing now. Earlier, it was not clearly doing it. It broke ceasefire for some time, but now looks like both sides are moving towards peace.
Thanks so much, Sumit, for putting into perspective. But it's time to move on to US market check. It seems after India's spectacular performance, it was turn of US markets. Wall Street three major indices rose sharply on Monday, with S&P 500 marking its highest level since early March, as a US-China agreement to temporarily slash tariffs brought some hopes for the easing of global trade war, which US President Donald Trump ignited in early April. On Monday, the S&P 500, Nasdaq and Dow all boosted their single-day percentage gains since April 9, and S&P broke above its 200-day moving average. This happened for the first time late March. Dow Jones Industrial Average rose 1,160 points, or 2.8%, for closing highest level since March 26. Similarly, S&P 500 gains 184 points, or 3.26%, its highest close since March 3, while the Nasdaq Composite gained 780 points, or more than 4%, for its highest finish since February 28. Nasdaq closed more than 22% above its lowest session close in April tariff sell-off, but was still almost 8% below its December 16 record close. Wall Street fear gauge the CBOE Volatility Index, which had hit a peak of 60 in April due to tariff fears, traded below 20 on Monday for the first time since late March. This kind of a rally comes in US, and China have announced that they would slash steep tariffs on each other 90 days. Remember, this announcement was important yesterday. When this announcement came, US market started to rise. The US said that it will cut tariffs imposed on Chinese imports to 30% from 145%, while China said it would cut duties on US imports to 10% from 125%. Meanwhile, the earnings session is winding down with more than 90% of S&P 500 companies have reported so far. Numbers from retail giant Walmart Open new tab are due later this week. Kanishka, but also crude market had quite a good session.
Well, absolutely, and after record levels on the Wall Street, the crude oil futures also jumped more than 1% yesterday after the US and China agreed to slash tariffs. The US crude oil gained 1.5% to close near the $62 per barrel mark. Brent, on the other hand, also rose more than 1.5% to settle at $65 per barrel. Prices jumped about 4% earlier in the session. The gains come as Washington and Beijing have agreed over the weekend in Switzerland to slash sky-high tariff rates by 115%. The lower tariff rate will remain in place for 90 days as the world's two largest economies continue to negotiate. Now remember, oil prices had plunged to the lowest level in 4 years earlier this month as President Donald Trump's global tariff regime raised the risk of a recession that would slow demand. At the same time, OPEC Plus has agreed to rapidly increase supply to the market this month and the next as well. Now, oil prices are down more than 12% so far this year. Low prices are also pressuring US shale oil producers who generally need crude prices at $65 per barrel to drill new wells profitability. Meanwhile, Aramco CEO says that oil demand is seen steady and growing in 2025. On the other hand, safe haven gold fell 3% yesterday as risk sentiment crept in following the announcement of a temporary deal between US and China. And the spot gold was down 3% at $3,225 an ounce. Bullion, considered a hedge against economic and geopolitical turmoil, hit a record high of $3,500 last month amid increased tariff uncertainty. Now, yesterday, US gold futures settled 3.5% lower at $3,228. Apart from that, in other markets following the US-China deal, the US dollar surged to over a one-month high and global shares rallied, as we mentioned earlier. Now, remember, a stronger greenback makes gold more expensive for foreign investors.
Now it's time to focus on the biggest global headline we are tracking. Remember, I told you while US market checked that two macro mites, US and China, will temporarily lower tariffs on each other's products. The combined 145% US levies on most Chinese imports will be reduced to 30%, including the rate tied to fentanyl by May 14. While the 125% Chinese duties on US goods will drop to 10%, in a separate address, US Treasury Secretary Scott Bessent indicated that both sides had a productive discussion on steps forward on fentanyl. Added that both countries do not want decouple. The statement also said the parties will establish a mechanism to continue discussions about economic and trade relations. In the same address, US Trade Representative Greer said US wants to have more balanced trade with China. Here a word from President of United States Donald Trump after administration announced the contours of the said deal.
Yesterday, we achieved a total reset with China after productive talks in Geneva. Both sides now agreed to reduce the tariffs imposed after April 2nd to 10% for 90 days. And I want to tell you that a couple of things. First of all, that doesn't include the tariffs that are already on, that are our tariffs, and it doesn't include tariffs on cars, steel, aluminum, things such as that, or tariffs that may be imposed on pharmaceuticals, because we want to bring the pharmaceutical businesses back to the United States, and they're already starting to come back now based on tariffs.
That was the US President Donald Trump on the latest US-China trade deal. But let's also listen to what US Treasury Secretary Scott Bessent and US Trade Representative Jamieson Greer had to say about the agreement between US and China.
The consensus from both delegations this weekend is neither side wants a decoupling. And what had occurred with these very high tariffs, as Ambassador Greer said, was the equivalent of an embargo, and neither side wants that. We do want trade. We want more balanced trade, and I think that both sides are committed to achieving that. We would like to see China open to more U.S. goods.
This agreement is really about the reciprocal tariff, which was imposed by the United States on April 2nd. The United States earlier this year imposed 20% related to fentanyl. That still exists. So if you're looking at Trump Term 2, tariffs on China, right now effective, it's 30%. There are prior measures which change by product, by sector, by level, et cetera. You can't really give a specific number on that right now. What matters for the agreement today is that we each agreed to come down on the reciprocal tariff and related retaliation to 10%. We're having very constructive conversations with our Chinese counterparts.
Also important commentary coming in from some Federal Reserve officials. Governor said that the 90-day pause on important levies reduces the need for central bank to lower rates in a response to an economic slowdown. She said the tariff rates, now 30% on Chinese imports for the next 90 days, was still pretty high, and she expected definitely an increase in the prices and a slowdown in the economy. But as a result, Kugler expects that impact to be more muted. Meanwhile, Chicago Fed President agreed that weekend deal would lower the impact tariffs have on the economy for now.
All right, then moving on, like we have been telling you since the start of the show, all eyes will be on that key inflation print from the US later today. April consumer price index is expected to show the first clear signs of inflationary impacts from President Trump's tariffs. Now, headline annual inflation is forecast to come in at 2.4% in April, flat from March's increase. On a month-over-month basis, prices are estimated to rise 0.3% above the 0.1% decline seen in mid-March. On a core basis, CPI is expected to have risen 2.8% over the past year in April, unchanged from the month prior when core inflation hit its lowest level in 4 years. Meanwhile, monthly core prices increases are anticipated to rise 0.3% ahead of March's 0.1% rise.
We'll be watching US CPI not only there but in India also. CPI will be declared later, but headlines revolve around the two macro might this morning. Now JP Morgan has lifted its forecast for China's economic growth following what it is called surprisingly positive deal with United States to dial down on the two countries' trade war. They estimated that as long as new tariff rates are maintained for the rest of the year, China's full-year GDP growth rate would hit 4.8% compared to the bank's previous forecast of 4.1%.
That's right. Meanwhile, Goldman Sachs has adjusted its economic outlook for 2025, citing recent developments in trade relations between US and China. The firm has raised its growth forecast for the fourth quarter of 2025 to 1% from the previously expected 0.5%, and simultaneously reduced the probability of a recession occurring within the next 12 months to 35%. Now, Goldman Sachs anticipates that the US effective tariff rate will see an increase of 13 percentage points, slightly below the previously assumed 15 percentage points. But with that, it's time to take a very short breather on this edition of Market Cafe. Stay tuned, we'll be right back.
Welcome back after the break. You're watching Market Cafe with me, Ankur Mishra and Kanishka Sarkar. Let's take a check how Asian markets are performing. First, let's see Shanghai. It is trading flat on the back of the news of signing deal with United States. The strongest in the pack is Nikkei, which is trading around 2% higher. Similarly, if you see Hang Seng Index, it is down 1% today, and ASX 200 is up around 0.5%. But on your screen, you can also see Nifty implied open, which is 0.5% lower after the spectacular performance which happened yesterday.
Welcome back to ET Now. You're watching Market Cafe with me, Kanishka Sarkar and Ankur Mishra. Let's get you more top stories of the day. Now, Zepto's founders are poised to close a $350 million secondary share sales by foreign shareholders in the quick commerce startup. The deal, which will bring on board some profile names as new shareholders, will likely close at a valuation of $5 billion for the company. My colleague Anurag Joshi is joining in with all the details there.
Zepto's founders are on the verge of closing a $350 million secondary share sale. Now, the deal is likely to value the quick commerce startup at $5 billion. And a domestic entity has put in $100 million into the transaction. And the remaining $250 million is from family offices and HNI clients of Motilal Oswal Wealth Management, which is arranging the deal. The transaction is likely to provide a partial exit to the offshore investors in Zepto. Among those foreign investors that will look at a partial sale of their stakes in the company. They will still be holding their stakes in the company. They include Nexus Venture Partners, Glade Brook, Stepstone and General Catalyst. Now, every foreign shareholders will sell a proportionate 15% of their holding in Zepto to the buyers, and the Zepto's founders are seeking to do this exercise to raise the Indian shareholding in the company to about 42% by the end of this transaction. And the eventual goal is that the Indian shareholding, the domestic stake in the company goes to about 50% ahead of filing documents with SEBI for a proposed IPO. The plan is for the company is to become a fully Indian owned and controlled company.
Zepto's promoter group led by entrepreneurs Adit Palicha and Kaivalya Vora are set to raise their holdings too in the startup about 21% from around 17%, and entity linked to the founders has also closed a 1500 crore rupee structured product deal. Talk about it in detail and break it down for the viewers.
The Zepto's founders are seeking to increase their equity stake, which is currently around 17%. They want to take it to 21%. And this is towards that goal of increasing the Indian shareholding in the company to first 42% after the transactions close, and then eventually to 50%. Now, sources have told us that the Zepto founders have signed a binding debenture agreement for a 1500 crore rupee structured deal. Now, the structured equity is intended to allow the Zepto promoters Adit Palicha and Kaivalya Vora to increase their stakes in the company, and they are looking to the size of the deal is 1300 crore rupees, but the structured deal has already got commitments of over 1500 crore. Edelweiss, the EAAA India Alternatives that is arranging the deal, and this funding is secured against the shares of the promoters. Now, this is being done through a holdco which is controlled by the Zepto promoters, and the yield on the structured equity funding is linked to the equity upside in the Zepto shares, which currently are unlisted but are proposing to go for an IPO. They are offering investors a 16% annual internal rate of return, and any upside over 16% that will be split among the promoters and the investors in the deal, whereas the founders would have to compensate the investors in case the equity performance, which is reflected in the IRR, is below 16%, and that needs to be compensated by the promoters to the investors.
Thank you, Anurag, for getting us all those details. But now, moving on, all eyes will be on inflation report for the month of April. Now, analysts are penciling in CPI to ease to 3.27% as food prices decline further. Gaurav is here with all the details.
Well, yes, when it comes to inflation data, now experts believe that inflation is likely to come even lower. When we talk about inflation last month, we have already seen that inflation was at a 5-year low level. But in this month, they are expecting inflation to come even lower to somewhere in the range of 3.2 to 3.3%. When we look at the overall expectations, they range anywhere between 2.8 to 4%. And why analysts believe that CPI is going to come down is food inflation. When we look at food inflation and the trajectory, we have seen that food inflation has always been a pain point, but for the last few months, food inflation is easing. As per analysts, this is actually a usual trend when it comes to the winter crop, and that is the reason why they're expecting food inflation even to come down. In fact, what they're saying is that the food inflation is likely to hit the trough, and it is not at the trough yet. When we talk about food inflation and other concerns like gold prices increasing, although when we talk about core CPI, they expect core CPI to remain stable, but when it comes to overall CPI, because of food inflation easing, we may see CPI number coming down to around 3.2%. In fact, when we talk about Union Bank's analyst, he believes that CPI can be there at around 3%, which will be lowest level since September 2019, and the reason being that food inflation. Going ahead, what we can see is that IMD has already predicted that the rainfall is going to be in the normal range, above normal range of around 105% of the overall normal range. So any kind of indication on how the food price is going to be is a key thing to watch out for. But as of now, in April, we may see inflation even easing down below 4% mark that RBI has kept.
Thanks, Gaurav, for those details. And if inflation comes in at 3.27%, it will also give push to Reserve Bank of India for looking forward to more rate cuts, which they had already indicated earlier. But moving on, Tata Steel reported Q4 numbers in line with expectations of the street, but UK operations continue to be under pressure. The steel giant saw robust India growth with net debt falling by 4% QOQ. Ashesha is joining by with more details on this.
Yes, steel major Tata Steel has reported largely inline set of numbers. India operations volumes have risen by about 6% on a sequential basis, but realizations have fallen. As far as European operations are concerned, remember UK continues to witness losses in the quarter gone by on account of transition. However, Netherlands operations has turned profitable in the quarter gone by, and that is a positive. As you mentioned, net debt declined by about 4% on a sequential basis to come in at about 82,500 crores, and this is on account of working capital release. So this is another positive. As far as numbers are concerned, revenue has come in at 56,200 crores, which is an uptick of about 5% on a sequential basis, and margins at 11.7% are bang in line with ET Now poll of 11.7%. As I mentioned, European operation losses, they've come in at $37 per ton, versus a loss of $41 per ton that the company had reported in the previous quarter, largely in line with estimates, but Netherlands has turned profitable, and that is a positive. So all in all, numbers are largely in line with what the street was working with. Management commentary on transition in the UK, in Netherlands will be crucial now, but all in all, in line set of numbers, debt has fallen. European operation loss at $37 per ton is also in line with estimates.
Thank you, Ashesha. An inline set of numbers for Tata Steel. But before we let you go, Hindalco is also in focus as Novelis has reported an inline set of numbers for the quarter gone by. The aluminium producer saw substantial margin recovery and maintained its volume and margin guidance as well for FY26. Help us understand the fine print of the same.
Absolutely. Hindalco's wholly owned subsidiary Novelis has also reported largely in line set of numbers, and EBITDA per ton that has recovered significantly on a sequential basis. It had reported EBITDA per ton of $406 per ton in the third quarter, and it has recovered to $494 per ton in the fourth quarter, an improvement of a solid 26% on a quarter-on-quarter basis. So margin improvement has been very significant. However, management has withheld its guidance for FY26, citing uncertainty on account of tariffs, so that remains a concern. But Bay Millet facility continues to remain on track. That's their expansion plans. It is likely to be commissioned in the second half of calendar year 2026. Management has pegged in a capex of about $1.9 to $2.2 billion for FY26, and we also have a host of brokerage reports that have come on this. Citi, for instance, has maintained its buy stance on Hindalco after Novelis numbers with a target price of $725. Citi says Hindalco will likely move in line with LME aluminium price movement in the short term, and they should also benefit from Bay Minette expansion that is currently underway. Axis Capital, meanwhile, has reiterated with buy stance. 770 is their unchanged target price. They are building in EBITDA margin of $495 per ton for FY26 and $511 per ton for FY27. So all in all, numbers are in line. Brokerage houses continue to remain positive. Although near-term guidance has been withheld, there is no negatives as such from Novelis numbers this time.
For those details about Novelis as well as Tata Steel, but after that it's time to talk about the block deal which may happen later in the day. China's Alibaba Group is all set to reduce its shareholding in Paytm parent company 197 Communications further. According to sources, Ant Group backed Antfin Netherlands holding will offload 2.6 crore shares representing around 4% equity in the open market today. Sumita Karir joins in with more details on this story.
Sources say that China's Ant Group will be selling a 4% stake in Indian payments firm Paytm for $242 million, and that's also what a term sheet seen by ET Now shows. Ant, remember, is an affiliate of Alibaba, which is a Chinese conglomerate. It will sell stake at 809, slightly above that, rupees per share. In fact, it is not really clear or immediately clear on who the buyers would be, but Goldman Sachs India Securities and Citigroup Global Markets India will be leading the sale, and that's also what the term sheet showed. Now, Paytm did not immediately reply to a request for a comment officially. In fact, Ant, remember, previously sold a 10.3% stake in Paytm to founder and CEO of the company, that is Vijay Shekhar Sharma, in 2023 August. Now, this move also follows a string of major investor exits from Paytm that's happened in recent years. Now, Japan's SoftBank Vision Fund also exited in the June 2024 quarter.
Thank you, Sumita, for getting us all those insights. But it's now time to take a look at the stocks to keep on our radar today. In fact, Gaurav is standing by with just that list. Gaurav, what all is on your list on the stocks to track today?
Well, first let's talk about Angel One. On May 14, there is going to be a board meeting where they may consider transferring the business of stockbroking, research analyst and mutual fund distribution to a company, from company to Angel Securities. So internal transfer, but still watching out on how the terms are going to be. Other than that, BSE is going to be in focus because 23rd of May is fixed as a record date for bonus issue for BSE. Cochin Shipyard is also going to be in focus because company has said that they're going to strengthen their collaboration to boost India's ship repair and offshore fabrication, and with this, they have also already tied up with Dockyard World for the cluster. They have tied a cluster for the shipbuilding and the ship management. Other than that, Piramal Pharma is also going to be in focus because company is going to invest around $90 million to expand 2 of the facilities which are situated in USA. Lastly, let's also focus on HRF because very good set of numbers is what we saw from the company. EBITDA margin, when we look at that has increased almost by 445 basis points on a sequential basis, and as a result, we are watching out on this stock as well.
But telecom major Bharti Airtel is also set to come up with its numbers today. Remember, these numbers will be announced after the company had also indicated that it has reached out to government for equity conversion. But this time, the expectation is that net profit may decline 54% on QOQ basis. Ansh is joining us with more details.
Bharti Airtel is set to report strong operational quarter, so revenue is likely to rise by around 7.7% sequentially to 48,602 crore. Whereas if we talk about Africa revenue, then that is expected to grow by around 2% sequentially in dollar terms to $1.3 billion. If we talk about EBITDA on consolidation basis, then we are seeing that it might go up by around 12% sequentially to 27,505 crore with margin expansion of more than 200 basis point to 56.6%. Now this India EBITDA may boost largely due to Indus Tower consolidation. But on the bottom line, if we talk about net profit, then that may fall sharply by around 54% sequentially to 6,752 crore, as last quarter actually included one-time exceptional gain of around 7,546 crore. Talking about business front, if we talk about segment wise, then mobile service revenue may dip by around 1%, whereas enterprises business is likely to decline by 4 to 5%. ARPU may rise by from 245 rupees directly to 250 rupees, and this would be on the back of 2G to 4G migration. Also, data subscriber is expected to be at 28.4 crore, which is up by around 2.2% sequentially. Now, apart from these numbers, there are key things to watch out for. First is progress on 5G rollout. Second is capex trend, and third, most importantly, is cues on future tariff hikes.
All right, thank you, Ansh. But let's keep it with the earnings space then. Now, stable US sales and new launches are set to drive Cipla Q4 numbers. Let's go across to Sharad to know what the street is expecting from Cipla this quarter.
In focus is Cipla, and largely good set of numbers are expected to come in for the fourth quarter. Revenue is expected to jump up almost 10% on a year-on-year basis, while interestingly EBITDA is expected to jump up almost 37%, with margins also going up more than 400 basis points if you compare it on a year-on-year basis. Now the profit is expected to come in at roughly 1200 odd crore rupees, which is almost a 28 odd% jump. Now looking at the important factors to watch out for, they includes that US sales are likely to remain stable year-on-year basis, coming in at $229 million in the fourth quarter with new launches in focus. Revlimid contribution is also expected to be good in the US sale. Now keeping an eye on the lanreotide sales in the US market, while the company has said that the normalcy will resume for US business from 2025. Now expect the Indian sales to grow between 10 to 13% on a year-on-year basis, driven by stronger growth in cardiac, gastro and urology segment. European Union and rest of the world is expected to grow by 9 odd%, and US sales is expected to aid the margins, which we had stated earlier. Also keep an eye on the inhalation and peptide assets for the US markets and the semaglutide for the Indian markets. This is the three important commentaries also which you'll be watching out for Cipla, and the outlook on the CAGA segment in terms of field force expansion and newer introductions. But largely good set of numbers are expected from Cipla. Thanks, Sharad. Apart from Cipla, Hero Moto is also set to announce its Q4 numbers today. Srishti is here to explain what the street is penciling in from this quarter.
A decent set expected from Hero MotoCorp this time around, while on a YOY basis the number could see a bit of a jump up, but on a sequential basis a slight decline is what we are penciling in. Because look at the move in the volumes. The volume growth remains subdued as the two-wheeler demand did lack expectations. Just on a YOY basis, there has been a decline of 1%, but sequentially a 6% drop in the volumes is what we are anticipating. Other than that, factors at play, the average selling price is expected to improve 3% on a YOY basis, led by the improved mix of 125cc in their product mix. And when it comes to numbers, then let's take you through that. Revenue is expected at 9,654 crores. The EBITDA expected at 1,373 crores, while the margins will be the key to watch out for, because in this challenging environment and challenging volume number, what we have seen is that the margins are expected to be stable, because for the quarter gone by as well as on a YOY comparison as well, not much of a decline is what we are penciling in. They should be above 14%, and 14.2% is what we are penciling in. And lastly, on the profit figure, 1,094 crores is our expectations. But definitely, apart from the overall numbers for Hero MotoCorp, all eyes on the management commentary on not just the demand, but how they see the products mix shaping up for Hero MotoCorp. What is the likelihood and the contribution coming in from the EV segment as well? So all eyes on that as well. Back to you.
Then all eyes on management commentary from Hero MotoCorp. But apart from that, Tata Motors also set to report its Q4 numbers. The auto major is expected to report a weak set of numbers with margins under pressure. Srishti, what's the street expecting on this counter?
So when it comes to Tata Motors number, let me first give you the volume picture. This time when it comes to their India business, both PV and CV have witnessed a decline in their volumes on a YY basis. A 6% decline in the PV volumes, a 3% decline in the CV volumes is what we have seen, while the JLR volumes are expected to grow by 3% on a YY basis. And especially now when it comes to the margins, the CV EBITDA margins is expected to expand. PV EBITDA margin expected to remain just stable around that 7.3% mark. But well, of course, as we know, the key to watch will be the JLR EBIT margin, and this time an expectation of 10.7% is what we are penciling in. Now let's take you through numbers as well. When it comes to revenue front, then 1,23,158 crores is our expectation. EBITDA expected at 16,331 crores, and the consolidated margin expectation is at 13.3%. Yes, on a YOY basis there will be a decline if the numbers come at 13.3%, but sequentially a slight jump up is what we are expecting. And lastly, on the profit figure, one should not compare it on a YOY basis, because the base had a deferred tax impact as well, and this time talking about the numbers, 7,669 crores is what we are penciling in. So that's the expectation from Tata Motors on the number front. But the key to watch will indeed be the management commentary amidst all the tariff announcement that has been going on. Yes, of course, the US-UK tariff deal is through, but what was the impact in the quarter gone by, and what kind of an impact is likely with that 10% tariff still through? That will be something that we will be watching out for, and along with that, the management commentary on the domestic demand will be the other key trigger that we will be watching.
Thanks, Srishti, for those details. After Q4 numbers, it's time to focus on big voices on India. Investors are focusing on India after US, according to Mark Mobius, Chairman Mobius Emerging Opportunities Fund. Listen into what he had to say about India opportunity and sectors he is bullish on.
We have a new fund and we want to get into the end market. But the problem is it's up to 3 months now. We've been working to try to get into the Indian market. The paperwork and bureaucracy is incredible. I think it's very important for India to loosen up on these regulations to make it easy for people to invest, particularly now that you have this opportunity to take business away from China. And so I think it's very important that India open up more and more. But yes, I believe there's great India. And as soon as we're able to, we will be investing in Indian stocks. We've got a number of ideas. I think the defense sector is very interesting. Pharmaceuticals is going to be interesting now in view of what Trump said, because now U.S. pharmaceutical companies will have to look for lower price pharmaceuticals that India can supply. So I think that's going to be very interesting going forward. And of course, we always like the IT sector in India. That's going to be a very good sector to be active in going forward.
Your holdings were APL Apollo, Persistent, Vodafone, and if I'm not wrong, Waaree Renewables, right?
Yes, these are all great stocks, but we're looking at other stocks. Can't say which ones yet, but we're looking at a number of new opportunities in India. As you know, India's tech sector is deep, and there are many companies that have great opportunities. So we're looking at all of those.
You mentioned that Indian IT companies are great companies. While these are great companies, cash-rich companies, strong buybacks, but there's no growth. Growth is up 10%. Would you still buy these stocks?
No, of course, we're looking for growth. That's the reason why we look beyond those stocks to look at companies that are just coming up, that are now at the bottom or are now just starting and have great growth prospects. Of course, we want stocks that have a good return on capital, but most important is growth. Earnings per share growth is critical, and that's something we want to focus on.
Okay. Mark, why is that China, despite attractive valuations, is not getting what was called as a easy trade? US money will move out of US, India, it'll go to emerging markets. Within that, India is expensive, it will go to China. Why is that easy trade not panning out?
No, I think the problem is that a lot of US investors have been focusing on the US market. They see great opportunities in the US, particularly now with the reforms that Trump is instituting. However, after the US, India is number one. There's great opportunities in India, provided that the Indian market is more open and that there's a cut down on bureaucracy.
All right, that's the key commentary coming in from market veteran Mark Mobius. But with that, it's time to wrap this edition of Market Cafe. But stay tuned to ET Now as the market takes all the action forward.
If you like this video, then like, share and subscribe to ET Now.